Welcome to the presentation on the Going Beyond Accounting Procedures Handbook. This guide is designed to ensure financial accountability and management excellence among our implementation partners. Let's dive into the high-level key aspects. This is the roadmap for today's presentation. We will start with the introduction and key control objectives, and then proceed through key financial policies and procedures. The main purpose of the handbook is to provide a comprehensive guide for partners to manage donor funds effectively. It aims to strengthen controls, standardize practices, and ensure compliance with financial and statutory regulations. The following key accounting controls and their respective controls are essential to the system of accounting to ensure accuracy, completeness, validity, economy, and efficiency. Budgetary control procedures. These ensure that spending is monitored against the approved budget, preventing overspent or misuse of funds. Regular reviews of budgets help identify and address variances promptly. Payment approval and authorization processes. All payments must go through a rigorous certification and approval process to validate that they are accurate, legitimate, and in line with the organizational policies. Bank reconciliations and audit trails. Regular bank regulations ensure that financial records match actual bank balances, minimize discrepancies. Maintaining a clear audit trail from payment requests to supporting documents ensures accountability and traceability. Asset management. Proper recording and monitoring of assets protect against loss or theft. An asset register ensures full control over office equipment, furniture, and other resources. Segregation of duties. This is crucial to prevent errors or fraud. By assigning different individuals to tasks such as approving payments, handling cash, and reconciling accounts, we create a systems or checks and balances that enhances financial securities. Our accounting system requires proper documentation and record keeping. All records must be retained for 7 years to comply with audit and legal requirements. Scanned copies of all accounting documentation shall be sent to DOT on a bi-weekly basis. The documentation shall meet all the requirements that have been stated in the handbook. Note well that a report template shall be provided to record and transmit the transactions for the period. The agreed-upon budget will become the contractual approved budget for the project to be undertaken. Cash advance request will be based on the milestone and agreed timeframe for disbursement throughout the contractual period. Expenditure reports will be submitted to DOT with all the supporting documents on bi-weekly. Variances exceeding 10% must be explained, and expenses must align with the guidelines to ensure accountability. I have also highlighted some of the eligible and ineligible expenses as indicated in this presentation. Note well that the budgeting and reporting are critical to financial transparency. Payment policies ensure all financial disbursements are accurate, authorized, and in compliance with approved budgets. Key principles include: payments must have adequate supporting documents such as invoices, contracts, and requisition forms. These documents help verify the legitimacy of expenses. Checks and electronic funds transfers, EFTs, are preferred for disbursements to ensure traceability, while petty cash is reserved for minor expenses. Dual signatories are required for payments over $2,500 to enforce oversight and accountability. Additionally, spoilt checks are retained as audit evidence and recorded properly. Note well that the payments are only made after verifying compliance with policies, budget limits, and the availability of funds in the relevant account. Bank reconciliation ensures alignment between the organization's cash book and the bank statement. This process is vital for identifying and resolving discrepancies, such as outstanding checks or deposits not yet reflected in the bank statement, unrecorded bank charges, interest earned, or direct deposits that need to be updated in the cash book. All unusual items, like long outstanding checks or unidentified credits, must be promptly investigated and corrected. Proper reconciliation prevents errors, identifies fraudulent transactions, and provides a clear picture of available funds. Procurement policies aim to ensure transparency, efficiency, and value for money in acquiring goods and services. First, purchases exceeding $500 require at least 3 competitive quotations to ensure fairness. If this isn't feasible, reasons must be documented. Second, the procurement team is responsible for maintaining an approved supplier list and ensuring that goods/services meet the required specifications. Third, for any instance where the lowest bid is not selected, the rationale must be documented and filed with the procurement records. These measures prevent favoritism, ensure quality, and maintain cost-effectiveness. Payroll processes are aligned with local labor laws. Accurate timesheets are essential, and advances not accounted for are automatically deducted to ensure proper financial management. Fixed asset management ensures that organizational property is tracked, maintained, and safeguarded. 1. All assets are recorded in a fixed asset register with details such as purchase date, cost, location, and condition. This helps in tracking assets effectively. 2. Each asset is tagged with a unique identifier for easy verification and to deter theft. Additionally, assets are insured immediately upon procurement to protect against risks such as theft or damage. 3. Annual physical verification is conducted to ensure that recorded assets are in their designated locations and in good condition. Any discrepancies or losses must be reported and addressed immediately. 4. When staff leave the organization, they are required to return all assets assigned to them. This ensures accountability and prevents losses during staff transitions. To wrap up, the handbook underscores the importance of financial compliance, accountability, and adherence to best practices to maintain donor trust and operational integrity. For more clarification, kindly connect with us through the following emails displayed above. R. Kamara is for Rahima Kamara, Finance and Administration Manager from Tanzania, and Bolewe is our Regional Deputy Director of Finance from Kenya.